Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on stock charts, we'll look for long time frame trades. Please subscribe to my articles and Twitter feeds for updates intra-week. Okay, so we got ourselves a nice rally on the back of JP Morgan this morning. That was a beauty. So the SPY logged a new high intraday, and we'll see if that can hold up for the Friday close. That's a pretty important one, so we're going to watch that. Disney obviously announced their streaming service at about $7 a month, roughly half of what Netflix is charging, and the stock is on fire. So we're going to talk about the content industry, how to set that up, take a look. JP Morgan had stunning numbers this morning. They were up nicely, up about 3% on first blush. And then the yield curve response since the 3-month and 10-year cross, nothing really going on there. So anyway, just going to mention that. We also got a buyout on APC this morning from Chevron, and apparently Occidental was involved on putting in a bid as well. And live updates from from the industrial metals with the news out of China. So we're going to cover that off today. Lots going on. First of all, let's jump into just update this chart. Okay, so this is one of my favorite tools on stock charts. So you up at the top here, so you would go up here and you would go gallery view. And then in here, you would put the two symbols you want to compare side by side. And in this case, I've got SPY and IWM, the ETFs. And what you can do here, so this is a 10-minute chart. And again, I like it because I can just scroll through here. But what you're seeing is, the SPY has basically been sideways around 288 for 7 days. And today we saw a nice surge above resistance. And we're also seeing the PPO start to turn up after pausing at zero here. So we're heading into the start of earnings seasons. So this is a pretty nice bullish push, actually. And wanted to see that. Here we have IWM over on the far right-hand side. And what you see here is it pushed to higher highs, and now it's coming back to test support. So it'll be very interesting to see if IWM can hold up into Friday close. Okay, so here's the SPY, and as you can see, we're back through the highs back in October. So want to keep watching that and just making sure as you test a prior high, you want to make sure it holds the breakout. And on IWM, we can see that it's trying to get through that February high. So nowhere near the September, October highs, but that's what we're watching for on the small caps, is can they start to go. And again, they're bouncing off zero here. So this is a bullish place if it bounces. And if it rolls over right here, that's a very cautious place. So this is a really good place for us to pay close attention to price action. This is the weekly chart of the S&P 500, well, SPY. And what you can see here is, this triple top formation. And what we want to make sure of is we have the thrust power to get through. And again, I think that the market will struggle here. And I can definitely be wrong, but that's one of the things I'm concerned about. The IWM, we're trying to get through the 40-week moving average, so that's a bigger deal. And you can see we're right up around zero. So if that was to start to roll over, that would be concerning for me. From a P&F chart perspective, we're trying to take out these prior highs. And again, that's the high from February that we saw in the chart above. What we want to watch for, we have this downtrend, and now it's moved to an uptrend. But as you can see, we really haven't broken price formation yet. So want to keep watching this. If a person wants to get long, this would be the place to do it. And then your stop would go relatively tight. Okay, moving on to Disney and Netflix. This is a crazy, crazy move on these charts today. What we see, Disney shooting up higher, and now it's going to gently pull back. But I think the base is in place for Disney, and we'll talk about that in just a little bit as we move farther down. These are just intraday charts. And we can see that Netflix, since the first of the month, has been jogging sideways. Today marked a deep thrust down, and now the market's trying to resolve which way it wants to go. On the news, looking at the daily volume, you can see that Disney's already over 30 million shares today. So huge move. And again, this was price resistance here for Disney. I had written an article right back in here as Disney was trying to break out to prior highs and mentioned that we might struggle a bit on momentum. I'll show you that article in just a second. But we pulled back down, built more of a base, and now Disney looks like it wants to break away. So we'll just watch to see what the price action is here, but you never want to buy this kind of an opening gap. You'd like to see it gently pull back, and then you get a chance to fill down after the, I'll call it, euphoria has worn off. The difference between Disney and Netflix, if you can here, if we drew a line down here on top of the relative strength, and again, relative strength to the S&P 500, what we see is Disney is currently breaking out in relative strength. And we can see that Netflix is currently breaking down in relative strength. So this is a real rotational play where it looks like money's moving out of Netflix and into Disney. And this will be in a very important place. This zero level here, whether it's zero or not, doesn't really matter to me, but new 3-month lows in relative strength would usually suggest institutions lightening up on it. And then the other thing that we'd be looking for, obviously, is does the PPO hold up? Or does it start to break down? And this breakout on Disney is just textbook. So we're going to cover off a little bit more about the price action and the stuff that we can see on the indicators in just a second. The scooter ranking for Disney is now soaring above the 75 level. And when it's up there, you can usually do pretty well. When the market was going down here in October, November, December, Disney was holding up. So it was behaving better than a lot of stocks, but the problem is a lot of stocks were dropping. So here Disney was actually outperforming the S&P 500 by not dropping as much. And that's one of the problems with relative strength investing is if both are dropping and one isn't dropping as fast, it's outperforming, which is in absolute terms means you're still losing money. So always be sensitive about that. Netflix, again, this sideways price action, we can see the scooter ranking is gently pulling down. And when we go down and look at the weekly view here, what we see is Netflix had been, really for 2 years, had maintained a very strong bias to the upside. Recently, on this pullback, it came well below its 200-day moving average or the 40-week moving average. And you can see this dip down here. If we put in a significantly lower high on Netflix on the PPO here and roll over now, I would be very concerned about the long term for that chart. If Netflix is going to give it up here, so one of my primary beliefs is that when the PPO goes below zero, you have the potential for the stock to be making a final high for a long period of time. So in the case of the PPO back in 2016, even though the overall stock market started to rally from here, Netflix never did, and it stayed down here. And basically, while everything else was rallying through 2016, Netflix never did. And then you had this trend line drawing across the top, and you had the PPO starting to improve. You had the full stochastic starting to get above the 50% level, and then the stock started to perform well, and the full stochastic stayed above 50 for over 2 years here. Really, really bullish, and all of these dips down were nice. The difference is now look how much time Disney has spent below the full stochastic 50 level, and that started long before the September high. And so what we'd watch for here is this pullback, and then if this rolls over, that's how a chart breaks. And let me give you an example. Maybe just go get Facebook or something like that. So when we look down farther on this chart, let's go down here to the weekly. So what we got with Facebook was this dip, and then you surged up, and then right here, this was obviously a big crack, but then it fell down for a long period of time. And now Facebook is rallying back up to kind of its normal levels. But the important thing to be aware of is when these stocks really make this dip below zero, the potential for the next high to be a final high is pretty important. Now, I'm not sure I would have caught this, but I would have avoided this with just using that kind of simple logic. And we can go through the Apple chart as well. It would have the same sort of characteristics that it just tells you to avoid them. And so getting down to this weekly, so Apple dipping below here. So if Apple's going to roll over right here at 0, I'd be very worried. And much like Netflix, if we're going to have these two leaders really start to stall here, that would be a problem. And again, I'm an Apple, I own a lot of Apple stuff, but really not a fan of a lot of their hardware lately, overpriced and under spec. And so it's becoming, I'll call it an accounting play as opposed to an innovation play. So anyway, as these charts make these big plunge lows, it's important to see if that's a final low or if, the next rise is a final high. And that's kind of one of the last places to get out. Now you can see over here, we had moved below 0, bounced up, and then pulled down again, and then stayed below 0, pulled down again, and you continued to have lower highs. And then it finally started to break this downtrend in momentum and take off to the upside. Very bullish. And then here you had a big downtrend in momentum, like a year long, and a breakout to the upside, very bullish. We can go to JP Morgan and Bank of America on this same chart. And again, what I'm watching for today out of the banks is what we find on JP Morgan is we get the pop on earnings usually, and then the stock pulls back. And as the stock pulls back, we want to see the breadth come in across the industry, or we want to see if the breadth can hold up across the industry. So for JP Morgan, moving back above the 200-day moving average is a good place. You can see the relative strength downtrend being broken here. For Bank of America, it surged up and then it's given back all of its surge already today, and it's trying to hold this 29.50 level. I don't think we want to see that 29.50 break, and we've got a downtrend on momentum here that's being tested right now. So pretty good place to keep watching. On the weekly chart, what we see here, I did another chart already this morning for JP Morgan. Let me just go get it here. Sorry, JP Morgan. Yeah. So what I like on this particular chart is this PPO downtrend for a year, and JP Morgan is just breaking out. This is pretty bullish, and I would like to see this now. Again, if it just comes up here and stalls at 0, that's another whole issue. But in general, you're breaking this downtrend in momentum, and I think I've shown you on Apple, on Facebook, on Netflix, those are all nice places to enter when your momentum broke downtrends and started to take off. So for JP Morgan, again, the strongest bank out there, if it can't get through this 116, I think obviously that would be a big problem for all of us. And if it rolls over here at 0 on momentum, that would again kind of indicate after going below 0, rallying up, and that makes its final high, that could be a right shoulder. So I'd be watching that very, very closely. Okay, looking at the JP Morgan chart, we can see, this push up to this main resistance level and a little bit higher to go here, another $5 or whatever. And on Bank of America, this chart is way more constructive recently, obviously holding up in here. This big push down here is a problem for me. Now rallying back up, we're at the prior high. So if it was to roll over and start failing here, that would be considerable. And again, the reason is because this chart is actually on a sell signal. And the reason it's on a sell signal is it broke below this previous column of O's, and it hasn't risen above the previous column of X's yet. So while it's doing this, this whole range in here is still on a sell signal until it makes a higher high. And if it got above $30.41.1, then it would move into a new bullish signal. So just because it's in a column of X's doesn't make it bullish. What makes it bullish is when it makes higher highs. So in this case here, this was a higher high, so bullish becomes bearish right here, and now comes back up, and now we want to see how it behaves here. So pretty important place to watch on these charts. Obviously, JP Morgan's been making higher highs here, and after making a lower low, this was sell signal, this made its new high this morning. This breakout is a fresh push into a bull market signal for JP Morgan. Okay, so lots of coverage there. One of the areas that I'm worried about is Europe and Asia, and so I put up the EWJ chart, which is the Japanese stock market, and the ETF for the Japanese stock market, and for the DAX, Germany. And what we see here is this downtrend, and again, 10-minute chart, but just trying to get a feel for the intraday price action. And you can see that this chart basically gapped up and is letting go this morning. I want to see if this chart holds up into the end of the day. My expectation is it probably won't. For EWG over here, this is trying to break out to new highs, and the PPO held around zero and is starting to turn up. Again, we're on a 10-minute chart, so I don't place a lot of informational value on the PPO on a 10-minute chart when we're looking at weeklies. But this is the issue here. We're sitting here trying to break through the 200-day. The 50-day is right up tight here. And you can see the 50-day has been support for 3 months. Back here in September, we got above it for roughly 2 weeks and then fell down. Here, Germany is testing its first day above on EWG. Again, it could be different on the actual DAX itself. But watching this, you can see when the Nikkei is below the 40-week moving average, that's a pretty important place. And then it found support there and took off to the races. And here we are testing this level again and again. So we're about to get resolution one way or the other. And again, I think it's down, but we'll find out. So, and both of these charts, you can see the PPO is just trying to get back above zero. So if it rolled over here, this would be what we call a counter trend rally, and then it basically continues the downtrend. So we haven't made a higher high here yet, watching closely. Here we have on Germany this morning, so that's very bullish. Let's just watch and see if it holds. Because those two markets, one in Asia, one in Europe, helps give us a sense of what's going on, and they're quite closely correlated to the US market. Okay, so lots of on the gallery view there. This is an article I wrote about Disney, and I said why the Disney ride might be just getting started. This is back in November. And the point I made there was on this weekly chart, the relative strength was starting to break out. Price was trying to move above the previous level. And one of the concerns we had was the full stochastic could not get back into overbought. And the PPO has a big 6-year down sloping trend line. So I mentioned here, one of the things to watch on Disney is the momentum trend shown on the PPO. It looks like it wants to push higher, but it's up against this declining momentum line. Be careful if the momentum starts to roll over here. The reason this trend line exists is all the momentum continually peaks just when investors thought the stock could go on to new highs. So anyway, that was kind of an important one. So let's just go back and look at Disney again. Whatever, just grab the second side of this chart. And on here, what I want to show is that as Disney is trying to break out of this base here, the PPO line is now downtrending on a weekly chart. And if this is going to break through here, this is a very bullish place. And you can see that we've had rising lows in momentum. We got down to zero and didn't break below. But we were in a very tight wedge here. This could have broken either way for, the last 6 months or whatever, figuring out which way. And it's finally breaking to the upside very clearly, which is extremely bullish. I think the main point I would make, again, is going back to this chart in the article. So we can just click on this to see the live version. You can do that on any chart in any article. And let me just open this up a little bit, make the width a little wider. And we'll just update the screen size. Okay, so here's our PPO line. And again, we want to watch and see that it gets above this. But if it starts to break a 10-year trend line on momentum, you really want to own Disney. And I think that's what's going to happen again. You've got big upsloping momentum, not getting below zero anymore. This is a perfect place to look to get long, not short. And I would watch this chart very closely, any kind of a pullback, probably on a daily or an intraday chart for helping you get a better entry. Okay. So one of the things I did this morning was I went and I made a new communication services sector chart list. And the reason for doing that is when you go in, then you can just look at these charts anytime you want. So one way to them is from the S&P sectors page. And you can go in, so you just go into communication, and there's different types. And obviously, broadcasting and entertainment is up big today on the back of Disney. It's a big player. And when we look at the charts here, we can just click on the scooter rankings, and Disney's moving up very nicely up near the top of the group. A lot of these other charts have already been on huge moves, and it's pretty late to enter. Whereas I think the Disney move is probably just getting started. And again, if they start to include ESPN anywhere near that bundling package, I think this could go ballistic, and it would be interesting to see the fallout on some of these other ones. So I was watching today to see if any of these other ones started to let go, like Comcast or whatever. The chart is holding in there. It's not doing anything today, but I want to make sure that that uptrend stays in place. And Shaw Communications, this is a Canadian company, and it's, you know, you can see the breakout of $20 there, then rolled over, and now you want that $20 to hold. If you start seeing these cable companies start to drop, I think that would be a big deal. Anyway, keep watching this area, because I think with the changes that Disney's making, this is going to put a lot of pressure on Corus Entertainment as a Canadian company with a lot of content, and it's, you know, it's not really breaking out on the news of Disney today. But again, same sort of thing. It might end up just streaming its own stuff and getting out of the cable business, but it is owned partially by Shaw Cable, as an example. So lots of interweaving here on these charts, and this Tencent Music Group, a big one out of Asia that IPO'd late last year. Watching that one to see if it can break out to the upside, and that's the way the chart shape looks. Okay. So again, this is that PPO breakout on JP Morgan. I think at this point in time, you know, JP Morgan looks like a buy. If it can't get through the 115, 116 level, then you're just going to put your stop right up there. And if it rolls over here at zero on momentum, that would be textbook technical analysis telling us to get out. Okay, one of the other areas that's moving today on the news out of China was a lot of the industrial metals. And while this chart is still stuck in limbo between the 10-week and the 40-week moving average, and for some reason this chart's taking forever to update. While it's updating, I'll go over here. What's going on? Okay, there we go. While this chart is updating, one of the things that I want to show you is FCX, Freeport-McMoRan. And again, it's starting to push above the 6-month bases here, so this is pretty nice. Full stochastic moving above 80, momentum moving above 0. So these are all very nice pushes, and again, I think it's on the back of China. Tech Resources is another China kind of issue, and you can see that this has now got the support of both moving averages under it. It's moving above this $24 level and looks like it wants to go higher, and the PPO moving above 0 is very positive. So, you know, with all of these trends in place, that's the kind of stuff you want to see. That's good price action. And if it starts to break down from here, then our stop is nice and close because it didn't hold the breakout. So those are nice to see. On the back of the energy sector, and the point I want to make on this one is, you know, one of the things I wanted to see is how much stuff is moving. And really, we only want to look at the things that have a scooter ranking. All of the other ones, they could fluctuate a lot. But just looking through some of these chart styles here, you know, these are tiny little bases trying to break out, and nothing wrong with them. I mean, those are nice places to enter, right? So looking at these companies, one of the things that's interesting is a lot of the leadership charts that were leading this group were out of Russia, and Lukoil and Brazil was another one. But watching these charts start to break down or break out is going to be pretty important. And if we sort them based on the scooter ranking that I had before, so I thought it was Lukoil was up. Yeah, here's Lukoil. So that one seems like it's rolling over near a top. Here's Sunoco, Cabot Oil and Gas just breaking out. We talked about that on Wednesday. This Cenovus chart is starting to move, and you can start to see a lot of these charts trying to break out and follow oil higher. This one was really nice with the push above 42.50 there. So interesting price action in energy. I kind of want to see some of these other big ones start to move, and CNQ out of Canada, Canadian Natural Resources, is starting to look pretty nice. Again, as these stocks start to lift up, you want to pay attention to them because they're trying to do it as a group. But if you're seeing the big ones like Royal Dutch Shell, if this stops losing its upside momentum, I think that's probably a clue that most of the move is over. Anyway, this one continues to push higher a little bit. So I'll leave it at that. The next charts that I wanted to cover off was USO and XOP. And the reason I wanted to talk about those is oil's not breaking to new highs here, but XOP shot up on the news of the merger and has now pulled back into that same range. So we really need XOP to find support at this level. If it continues to break down, this is a really critical place on the charts for me, not just in XOP, but on the overall chart. So I want to see the gap up that we had this morning hold, and I want to see these other sectors start to follow higher. And you know, we had a brief breakout in XOP last week on the Friday, and then it did nothing all week. So this week, are we going to give it back right away again? So if we can't get confirming follow through on this move, that makes it more worrisome. And again, the 200-day is well above this level. So that's a bit of a problem. Looking at USO itself, we're just barely above the 40-week moving average. I think on the actual West Texas chart, it's a little more stretched above it. But again, we see this time and time again where oil gets up around the 40-week and then can't get through it. So that's what I'm watching for. And again, this energy sector hasn't been able to follow it up and get going either. With momentum below zero, this is a critical place to be cautious. From the PNF charts, these look great, right? Starting to really move. So, you know, some of the charts are starting to step up and you can put positions on, but you have to keep stops under them because it's feeling very tepid, especially with this kind of price action on the XOP first thing this morning. Get a gap up on the news of one merger, and then all of a sudden everybody's selling into the move. So stuff like that concerning. Let's look at OIH, which is the, wasn't really Owens, Illinois I was looking for. Boy, that was funny. OIH. Okay, so this is the oil services, and they're back to unchanged on the day. So trying to gap up, and again, watching these to see how they perform as we get this news out of the industry is pretty important. We don't want to see this start to roll over, and that's really what I'm worried about at this point in time. Okay, so the actual companies doing the merger this morning were Chevron and Occidental had also bid for Anadarko, and what you see is Chevron let go on the news that they were acquiring it. Occidental broke down on the news that they didn't acquire. And the Occidental chart's been treading water sideways for 4 months, really, but broke below the 50-day moving average again today. And the Chevron chart clearly breaking down. I mean, this is a big purchase, so it's a pretty big deal, not a surprise. But relative strength uptrended, broken middle of March, let's just say, and now all of a sudden here's Occidental and it's making new 6-month lows, so that's not good. Looking over here on the bigger picture for Chevron, it was just at its prior high, so this is a real ceiling on the chart. I think I would be very, very cautious. If you think this is good news, I would be careful. Anyway, with that, thanks for taking the time to join me on Market Buzz. Thanks, everybody. Bye-bye.